Hi, everybody, and welcome to the PlantStock channel. Jesse here for you who don't know me yet. Today, we're going to focus on Beyond Meat and their latest Q4 report and also their fiscal year 2020. As we move on in the video, I'm going to be using their investor presentation that came out now on the 25th on Thursday, and I'm going to be combining it a little with the conference call. I'll be talking about what they said in the conference call, and I'll have some bits for you to listen to as well. But I must say, after listening to the conference call and looking at their investor presentation for this year, I feel really bullish about them, more than before. It's looking really good considering the year that they've had, or the year that we all had, right, internationally, due to the pandemic. They actually managed to pull through quite well. So in the end of the video, I'm going to give you my ideas and thoughts why I'm more bullish now and why you as an investor should feel good about investing in them, or if you haven't already invested in them, and why you should feel good about starting to invest in them. So stay tuned for that. And for the ones that want to have access to the conference call yourself and want to have a link to the investor presentation, I'll put that down in the description. So make sure to look at that. But as always, guys, I truly appreciate an early thumbs up since it does help with the algorithm reaching more people, which is the whole idea with this, right? And if you haven't subscribed to the channel yet, make sure to do so if you want to keep getting more information regarding Beyond Meat and other plant-based stocks. Really appreciate that, guys. Thank you. And I thought a good way to actually start off this whole video and this presentation is to actually let Ethan Brown, the CEO of Beyond Meat, to do the talking first. Mind you, this first part is going to be like 4 or 5 minutes, and you don't actually need to listen to it. I do advise you to do it because it's better to hear the man speak about it himself. But if you're pressed on time, just use the timestamps down in the description and you get to the other parts of the video. All right?
And with that, I would now like to turn the call over to Ethan Brown, Chief Executive Officer of Beyond Meat.
Thank you, Luby, and good afternoon, everyone. When we held our initial public offering a little less than 2 years ago, we articulated a vision for our business that was neither niche in focus nor limited in ambition. We outlined our goal of taking the core building blocks of meat, amino acids, lipids, trace minerals and vitamins, and water, and organizing them in the familiar architecture of muscle for purposes of providing consumers with a sensory experience that would be, with time, indistinguishable from animal protein. We celebrated and noted the importance of our success with the mainstream consumer, whom, as we are today, we were reaching in the meat aisles at the nation's supermarkets, among other venues. We wrote and spoke of a global brand that would be built on the pillars of taste, nutrition, and as we scaled and matured our manufacturing processes and supply chain, affordability based on the strong efficiency advantages of our production model. We argued that if we can match the taste of animal protein, provide a clear case for superior nutrition, and someday offer it at a lower price than animal protein, it would be a rare consumer who rejected the thesis and products. As we began 2020, we shot out of the gate, posting net revenues in Q1 that were 141% above those we saw the previous year. And then the COVID-19 pandemic hit, and like many businesses, we saw precipitous declines in our growth rates, driven largely by significant reductions in food service activities. We chose to keep investing in our business even as short-term challenges persisted, a choice we continue to make today as we remain focused on the long term. We invested heavily in China, where we built a sophisticated production facility in Jiaxing, and in the Netherlands, where we opened 2 facilities. One is an independent operation, and one owned and operated by our partner Zandbergen. We grew our operations team and acquired a new production plant in Pennsylvania, and we signed a long-term lease for a brand new corporate headquarters in Los Angeles, where we are building a state-of-the-art home for our growing research team and their laboratories, collectively referred to as the Manhattan Beach Project. These investments and activities, particularly during this period of COVID-19 revenue disruption, generated losses. They were, however, non-negotiable as we lay the foundation for forward growth. To this end, I'm pleased to share with you today 2 significant global partnerships, one with McDonald's and the other with Yum Brands, the parent company of Kentucky Fried Chicken, Pizza Hut, and Taco Bell, both of which are prime examples of what we've been scaling and preparing for. I want to express our immense gratitude for these partnerships and the opportunity to be of service to these industry titans. Both deals truly begin and end with leadership at each organization, and I hope that all who share my optimism for the future and my belief in the positive and determining role that consumers and corporations can play in shaping it will join me in thanking Chris Kempczinski and David Gibbs, CEOs at McDonald's and Yum Brands respectively, for their vision to offer expanded consumer choice on the menu. It is my strong belief that partnerships of this nature with partners of this caliber are required to accelerate our flywheel of availability and scale-driven cost reduction, a dominant theme in our bid for ubiquity among consumers here in the U.S. and abroad. As with all of our existing and highly important strategic partners, we view our role as working on behalf of their franchisees, employees, and shareholders to delight consumers in their venues. Even as we have invested, we will continue to aggressively do so across innovation, commercialization and manufacturing, and marketing to drive success across our partners in food service. Over the coming months, we intend to offer an inaugural Investor Day to provide greater details around our strategic initiatives, corresponding investments, and global growth plans. While we recognize that you undoubtedly have immediate questions, including with regard to the potential implications of our partnerships with McDonald's and Yum Brands, we are not prepared to elaborate at this time. I want to emphasize that due to the likely phasing of these notable partnerships, any activity is likely to skew toward the latter part of this year, and therefore, from a modeling perspective, the potential impact to Beyond Meat in 2021 is likely to be fairly modest.
So before we get to the ordinary presentation, and this is the part of the presentation though, I thought it would be interesting to just take a look at what their overall mission is. And that is that they're committed to providing products that enable consumers to eat what you love and hopefully still do you good, right? And do the planet good. So improving human health. So 42% reduced risk of developing heart failures and heart diseases. And basically 30% of most cancers that are developed in countries attributed to dietary factors, including consumption of certain meats. And we could actually do a whole video about that, or a whole series of videos about that at another time. That would be interesting for me, at the least. Also, that it positively impacts the climate. About 18 to 51% of global greenhouse gas emissions driven by livestock rearing and processing. We know that too. And addressing global resource constraints. 78% of all agricultural land is used for livestock, including grazing land and cropland dedicated to the production of feed. And 29% of the water in agriculture is directly or indirectly used for animal production. And when we really talk about the animals, this is something we, I think, tend to forget about, is that according to this numbers, and these are kind of old numbers, so I actually think it's more than this, considering that China gets to, or are starting to eat more and more meat. But about 60 to 70 billion land animals are raised every year and then slaughtered. So that's what they're kind of trying to help prevent here, right? Part of it. And before we get more into the numbers here, I think it's interesting, like we've talked about in many videos, that they're actually disrupting a really large industry on the planet, among the largest, which is the $1.4 trillion global meat industry, right? And just in the US, it's about $270 billion industry. That is what they're trying to basically, to some extent, attack. So when people talk about that, talk about the competition, this is not really in their interest in the long run. It's about trying to get market share from the animal agricultural sector. And we can see here just a quick, the net revenue for the year 2020 there, right? Maybe I should move me away a bit there. Up to $406 million in net revenue. And last year it was around 297. Now take a look at these numbers, right? From 2017 to 2020. I mean, that's incredibly impressive numbers. And yes, I know that there were a lot of disappointed voices out there that they expected them to come higher than this. But this last year, Rona, that's, impacted us all. I don't think it's surprising at all. And I think it's still really good numbers. So we'll talk more about that as we move on. And I think it's also interesting to see the total distribution and the brand awareness, especially the distribution here. When they IPO'd less than 2 years ago, the total outlets worldwide was about 31,000 places, right? In the US retails, like stores, markets, and so on, 17,000, and the US food service restaurants of different kinds, 12,500. And then you see the international retails, very low at that point, less than 2 years ago, around 150 only. And then international food service, different restaurants internationally, around 1,500. I'm not sure, actually, 2 years ago, if we even had Beyond Meat in Sweden. So, yeah, and looking at these numbers, it's not very strange, is it? So if we then take a look at the growth now, just in December 2020, 2 months ago, total outlets worldwide from 31,000 to, about less, that's only about actually 1.5 years. It's 122,000. That's a 300% growth. And the US, it's up from 17 to 28 in retails and food service restaurants and so on, up to 42,000. So that in itself is 230, almost 240%. And then when you look at the retails, international retail stores, I mean, my God, from 150 stores to 34,000. And that's incredible. It's a 22,000 percent change. And incredibly huge there. And the same with the restaurants, then from 1,500 to 18,000 internationally, also huge. And this is without counting McDonald's, the new McDonald deals, right? And Yum Brands deal, which is on a global scale. But then when we take a look at the sales by distribution channels, and we take a look a little at the numbers here, and we take a look at the US retail stores. In 2019, it was around $129 million in revenue, net revenue. And this year, it was 264. So that is still a really good progression there. It's about, I think, 104%. And that's during Rona times, right? So still doubling that. I think it's really impressive, the different stores that they have here. You have some of them here. And then US food service, they did go down about 10 million there. And I think we know why, right? They went up in the retail stores. Well, people need to go to the stores and eat, right? Whilst not everyone or most people don't really actually have to go out to restaurants and eat. And we know what happened. In the US, a lot of restaurants were shut down in long periods, right? And even though periods when they weren't shut down, probably people weren't going out eating as much, naturally. And then when we take a look at the international net revenues, we could see that 2019, 98 million in revenue, and 2020 down about 16 million there. And also not so strange. And to be honest, a lot of countries, my understanding is they shut down a lot harder than the US did during the when it was at the top, especially here in Europe. They took it really serious. So it's not so strange that they lost that much more overseas, right? And when we take a look at, I think this actually needs to be updated, but recent and notable updates, the customers they have that in January they signed with Starbucks in Kuwait and United Arab Emirates. And as we talked about on this channel, a limited time in Sweden and Denmark. I think it's going out in Sweden now in March, sometimes this, and in Denmark, I think April. But that won't matter, will it, considering that they've signed globally now with McDonald's. So they'll get here sooner or later in one way or another. They have the small ones with Pizza Hut and KFC, and that's also not the only thing, right? Because now they've taken the whole Yum Brands, which owns KFC, Pizza Hut, and Taco Bell, and that's also a global deal. So that needs to be put in here later, which is going to be obviously huge. And actually, Starbucks is actually, he talks about that they actually have their Beyond Meat products in Starbucks in China. I think it's over 3,000 Starbucks over there that they actually sell their products in. So that makes a whole lot of difference also. And some of the products that they have been selling the last couple of years, right? And we get to know that right now it's available in 80 different countries worldwide. And during the conference, he actually talked a lot about their international deals that, as you know, they are on their way of building factories in China and in the Netherlands. And they were talking a lot about that they believe in, which is obviously usually the best vertical integration, right? That keeping it all in-house. But in China and in the Netherlands, they still want to be able to, when they build the factories there, they want to make sure that the products that they use to, make these different beef patties and sausages and so on, that they use the products locally, right? So they don't ship them or fly them in from the US. If it is in the Netherlands, they make sure that they get the products locally from there. And it's the same thing in China. So I think they'll save a lot of money that way, but also that they're actually supporting the infrastructure in those countries and, helping the planet by all means. So if we take a look at the Q4 report and their 2020 performance update. So like we talked about here, the net revenues were around $102 million, gross profit 25.4, gross margin 24.9%, right? And if you look at the adjusted EBITDA, it's about 9.5 per dollar, which is in net revenues 9.3%. So the net revenue increased. It actually increased even during the pandemic to around 3.5%, primarily driven by increased retail channel sales, largely which was offset by a decline in food service channels sales due to Rona. And we know that. We've talked about that several times. One of the reasons, according to Ethan Brown, is that during the first part of the pandemic, people did buy a lot of Beyond Meat food and put it in the freezers. But when it got worse again, apparently, according to their studies, people still had a lot of the food, or either there for other foods, so they didn't need to go out shopping as much, which impacted their latest earnings. And we can also see here the adjusted gross margin, which excludes 3.7 million costs attributed to the pandemic, which was 28.5% with a year-over-year decrease, primarily due to lower absorption of fixed overhead production costs, where the company recognized higher per unit cost of goods sold in the fourth quarter of 2020, as the company sold off inventory on hand. And they also had to do some adjusted net loss, which excludes 3.7 million costs attributed to Rona, was about 21.4 million, driven by the decline in gross profit combined with higher operating expenses, primarily due to the company's increased headcount, meaning more people, right, to support long-term growth, investment in international expansion efforts, specifically in Europe and China, as we know, higher production trial costs, investments in IT infrastructure, and continued investment in marketing and research and development. And we know that they keep reinvesting their money as much as possible into R&D and marketing, and just like expanding the company, trying to scale it more and more. So even though in some people's eyes, this must seem like a negative thing, but if you think about in the aspect of Tesla, which did the same thing for years and years before they actually made a real profit, which was last year, this is something that's going to benefit Beyond Meat long term, no doubt. And just to try to get a little bigger understanding of the net revenue growth by channel, we could see here the differences that in 2019, US retails were up around 160%, but then 104% now. Still really good numbers, right? During the pandemic, that you get 104% in the US retails. And we find out that is the reasons because they actually did keep selling more and more. People who bought their food in the frozen section and the meat aisles actually came back to buy more. There's something like 55% repeat spender. So it means that when people start buying their products, 55% of them come back and keep buying their products. So they're pretty satisfied with that. U.S. food service, 14%, not shocking at all. As we talked about, the restaurants being closed and all. International retail, the stores there actually gone down there, or not going down, but still more actually. If you take a look at international retail in 2019, about 15 million. Here is 36. They're still gone down. It's over doubled, right? So, but it is. So what they've been selling mostly is still retail stores in the U.S. There's no doubt about that. And as we said, the restaurants have gone down from 61 million from 70. So I've talked about this many times, that one of the things that actually allure me most with Beyond Meat is their focus on research and development and innovation. They have a whole section here committed to that. And when we look at their R&D as a percentage of the net revenue, right? That's what impresses me most here. Beyond Meat puts about, of the net revenue, about almost 8% of it into research and development and trying to perfect their product, right? If we look at Nestle, which is the biggest food company out there, less than 2%, Kellogg, 1%, VH Group, 0.6%. And if we go down to Tyson, which is, my understanding, is probably one of the largest animal agriculture companies out there, only put in about 0.2%. And this is interesting, right? Because people keep talking about the whole competition and the animal agriculture industry being the most scary competition out there. And this here, when you look at Tyson, this is what they put on their annual R&D and innovation. So not very much, is it? So telling me that Tyson will be a threat to Beyond Meat when it comes to future dealings with, if they go in more and more into alternative meat products, I can't really take that serious at the moment, because this gives me the same idea as I've talked about many times on this channel with Tesla, right? That several other companies that's huge out there, used to be huge, that they didn't put a lot of time and effort into actually developing EVs and EV technology. And now when they're trying to, they're way behind. And I feel it's the same story here with Beyond Meat. So I don't worry at all about that. And when listening to the video, Ethan Brown talked about that it's still their North Star to get their products to be indistinguishable from animal protein, right? The latest burgers they're producing is supposed to be an even stronger resemblance in flavor and texture. It still has less than 35% fat, but they're not happy with that. So they're launching an even healthier version with 55% less fat. That's huge, in my opinion, considering today's issues with obesity and heart diseases. And they've had a lot of consumer testing that shows incredible results. And they're still going to keep putting a lot of capital into R&D until they have what they truly want, right? They're not satisfied. And they're only about 3 years away from getting a meat product that's going to be cheaper than meat. And they're on top of it, because 2 years ago they said, in 5 years from now, we want to have one of our items, one of our products that are going to be cheaper than meat. And now they're saying they're about 3 years from there. So they're keeping on time with that. And what I like also here is that their research team, there are over 150 people that are of scientists and engineers that focus on the research part of the whole company. 150 people is still not that huge company, right? It's about $9 to $10 billion. So having that many researchers of different kinds, I think, again, very impressive. So if I talk a little more about my thoughts on this, is that what I really like about Ethan Brown is that I get that Elon Musk mentality. As he talks about in the conference call, he doesn't care about the EP earnings or the EPS numbers. He doesn't care about what the current price of the share is. He just wants to focus on perfecting his product and making sure that they help make this planet sustainable, right? And when asked about competition, he said They like competition, right? They welcome it. It keeps them focused and on their toes. They're very invested in research, as we know, but also in many different aspects of the whole industry, meaning that they are way ahead of the competition. It means they have a good hold on their lead and they're going to exploit it. And if you listen to the conference called Parse that I showed you, you might have heard that the partnerships with McDonald's, PepsiCo, and Yum Brands probably won't give that much in revenue uh, in this year to come because it's going to take time to build it up. So even if the partnership's revenue potential might be fairly modest in the end of 2020, bearing in mind, like I said, it's going to take time before they actually get the ball running. And if Rona has cooled down and the vaccines have rolled out to most people, I think we can expect several hundred million more in revenue next year. I mean, think about it. With all the food service they already have on an international scope, with all the retail stores, if Rona wouldn't have started, imagine the revenue they would have had by now. I mean, take a look at the chart again. From 2017 to 2019, the amazing jump. And 2020 having such well-established platform globally and many of those food services being shut down for a long periods of time. And the retail stores, even though a lot of people are interested in trying to eat more plant-based or vegan or just trying to eat more healthy, if people are losing their jobs or worried about their overall economy, I don't think it's the right period for most people to try something new, right? That probably is more of a premium price compared to what they usually eat. That is the time when people keep eating what they're used to and try to keep their expenses down. As we know, Beyond is a premium product. You usually have to pay more for healthier food, especially processed food. And let's face it, when people are scared and nervous, it's probably not the time that they start thinking, time to start giving this plant-based food a try, and let's start cooking those beans and lentils. Sure, some of them did or are doing it, but trying something completely new like that is pretty far-fetched for most people, in my opinion, especially in time of crisis. But still, even though they had these huge challenges, their yearly revenue in the US retail went up by 104%. I mean, how amazing isn't that? They're still the brand that most people preferred buying in compared to the other competition, according to research. So if this year will be better with the pandemic, I imagine we will see something completely different. I wouldn't be surprised if we see 600 to 700 million next year. And the year after that, with McDonald's, Yum Brands, and PepsiCo in the bank, well, the revenue potential here must be immense. Also, another thing that was mentioned in the call, kind of like a bonus, the deal with PepsiCo, yeah, of course, they're going to help to create snacks and beverages that will be healthier for people and for the planet. But that got me thinking, what do they mean by beverages here? I mean, sodas and juices are already vegan, right? Usually. Could that mean some form of alternative dairy products? That will, of course, be huge, considering that the plant-based dairy market is predicted to be bigger than the alternative meat market, up towards $45 billion in a couple of years from now. This is one of the most exciting aspects, in my opinion. So, folks, if you still aren't convinced by now, I don't know what I can tell you at this point. Like Ethan Brown stated, these partnerships are the strongest in this space. A food company couldn't have better merits. And as many of you know, it's all about being in the right place at the right time and doing something about it. Ask yourself, is the current pandemic period, and even more relevant, post-pandemic, is that the right time to make changes for people? Knowing that the biggest culprit for the Rona situation was and is the animal agriculture industry. The same time as it is more and more apparent that we are not meeting our sustainability goals, but by changing our diets, we can not only help the planet and animals, but our own health. And the second thing you need to ask yourself is Beyond Meat doing something about it? I'll let Ethan Brown tell you what he thinks.
Great. Well, thank you. So today was obviously a very exciting day for us and something that's been long in the works, and with two really outstanding partners, with folks that are visionary and are taking a risk with leaning forward and I think a very calculated one that's going to bring great benefits to their shareholders, and we really look forward to executing on their behalf. There's a long and storied history at each company, and I study innovation quite a bit, and really have looked a lot at the original founders of both businesses. And I wanted to end with quotes that I think are germane to kind of what we're trying to do One is from Ray Kroc, at McDonald's. The quote is, "The two most important requirements for major success are first, being in the right place at the right time, and second, doing something about it." And so I think that does characterize how we think at Beyond Meat, that we do believe that we're blessed to be in this position at this time in history, and we're doing something about it. We're investing a ton in a relative sense against the goals we have. We're not paying attention to what that does in terms of near-term losses. That we think would be silly. We're looking ahead to the future and investing in the infrastructure and team that we need to have this be a major protein company globally. Second is from Colonel Sanders, and I think this speaks more to our adherence to non-GMO products, and it's harder to do that, right? But we think it's the right way to do things. And so his quote here is, "The easy way is speedy, the hard way arduous and long. But as the clock ticks, the easy way becomes harder, and the hard way becomes easier. As a calendar records the years, it becomes increasingly evident that the easy way rests hazardly upon shifting sands, whereas the hard way builds solidly a foundation of confidence that cannot be swept away." So we'll keep making the hard choices about providing products to people that we feel super proud of, that are healthier for them, that help them improve their bodies and help them make a contribution to the sustainability of our earth. And sometimes that leads to things in the near term that are expensive or difficult. But over the long run, we're 100% sure it's the right move. And so we'll keep doing that. So we appreciate being in partnership with these two companies that have such a storied history and bright future. Thanks very much.